So I am also, in addition to the fundamentals that I mentioned, I'm also a big believer in themes, and that's also what generates ideas for me. And I try to think about themes in the long haul, over the long term, instead of just kind of short term. So a couple of them I thought I would just talk about, and they can change. But for now, I feel pretty confident in them. First and foremost, I'm a big believer of the consumer. I think the consumer is stronger than people think. Not everywhere, and I know there are pockets that are really struggling, but for the most part, the consumer is actually doing quite well. And they are doing well because they have jobs. Now, I know the labor market is slowing as of now, but that's one of the reasons why the Fed is going to embark on a rate cut cycle. But in addition to the jobs, wages are actually hanging in there. Wage growth is about 4.5% to 5%, and that's actually above trend. And so between jobs and wages, that is actually very powerful for the overall consumer. I also like housing, and that is a big part of the consumer. And the reason it's important, because it's small in terms of overall the perspective to the economy, but a lot of it is that there's a multiplier effect. When you buy a home, you have to buy stuff in the home. You have to buy stuff outside the home. You have to buy a car to get from the home to wherever you're going. And in fact, there's a very high correlation between auto sales and home sales. And auto sales are actually running at about a 16 million SAR, which is pretty good. But why am I positive on housing when all we hear about in the news is that it's in a massive recession and it's really struggling? Well, first and foremost, it's not really struggling. It's actually, there are pockets that are doing better. New home sales are stronger than existing home sales. Why is that? That's because there is demand and there is supply for new home sales. Within existing home sales, you have 60% of people that have a mortgage under 4%. 30% have a mortgage under 3%. So with interest rates coming down and with the Fed starting to embark on an easing cycle, we have seen mortgage rates go from 8% in October of last year to 6.4% currently. And I think you're going to see rates continue to come down, mortgage rates continue to come down, and activity to pick up. The second piece is manufacturing. Now, manufacturing has been in a slump for the last year and a half. It's actually been in contraction area. So you're going to wonder why I'm recommending manufacturing. Well, there's a part of within manufacturing that is actually booming. We actually have a mini renaissance happening, and it's the energy transition and electrification theme. Anything tied to onshore, reshore, getting out of China, building factories here and around the world, it's happening. And a lot of it is tied to improving the power and the grid. We have not spent a lot of money, incremental money on the grid and the infrastructure in over 50 years. And in fact, the energy transition in and of itself over the next, let's say we're at 220, over the next 25 years, we're probably going to spend something close to $4 trillion on electrification, on energy transition. Again, it goes back to the grid and power, data center, electric vehicles. And I feel very strongly this theme will be around for a long time, and I don't think it's going to matter who actually gets into office. The next theme is technology. Now, everyone's talking about AI. We all like AI. I have exposure to it as well. It's a $1 trillion total addressable market. But I think what's misunderstood is the cyber security segment. So I think if you talk to some of the chief technology officers at various companies, which I do, they'll tell you they are spending in two areas. They are spending in AI because they don't know what it is exactly and how it's going to transform or not their business, and how to monetize it, by the way. And they'll say they also spend on cybersecurity because they can't afford to wake up and lose their business overnight. And I'll tell you, when cybersecurity companies have cyber attacks on themselves, the system is not working. And what's going to happen is you have a million different vendors right now, and the problem is they don't talk to each other. That's why we have these issues. So what I think you're going to see is consolidation. The big five get even bigger. And I think that's what CTOs want. They don't want to use just one vendor, but they don't want to use 20 vendors. And so they are going to be spending double-digit growth for the next many years. I also like the financials. The financials are going to work in a steeper yield curve. That's just their basic spread lending business. And we are seeing the uninversion of the yield curve. So that's number one. Number two, uh, the M&A in the industry has actually been pretty stagnant over the last couple of years, but we're starting to hear from companies that M&A is starting to see an improvement and the pipelines are building. We also are hearing capital markets are doing better than expected, especially in markets at new highs. So that should help. And the valuations, many of them are trading at 1x book value. And we had regulations that will get finalized sometime in this fall to reduce the regulatory capital requirements called Basel III Endgame. I think healthcare and energy are certainly interesting themes as well. I think both have been kind of frustrating, to be honest, given that they really haven't done that much in terms of performance or outperformance. But the demographics are so powerful in healthcare. The pharmaceutical companies are absolutely building out pipelines. It just takes time. I think the weight loss theme is in the second inning, but I do think those stocks are a little ahead of themselves. But I do feel like there are opportunities. My favorite way to play healthcare would be the device side as utilization rates continue to improve. Energy, I think, has just been a struggle because China is so weak, but I think it's also the fact that demand overall is a little less than people had expected. And there are a lot in terms of excess supply right now. So oil prices have come down, but companies are mint money at $30 oil, and we are at $70 oil. So the free cash flow, the valuations are very attractive. I'm not sure if there's a catalyst in the near term, but I do think there's some great values in energy. So